Hello everyone, I am Abhinav Agrawal. My master's thesis topic is stock trading using double deep reinforcement learning along with ensemble of supervised learning models. Before proceeding further, I would first like to thank all my student mentors, especially Sri Viran Gowda, Dr. Manoj, Dr. Rupal for all their able guidance to make me reach at this stage. Stock markets are ever evolving. People think as a big puzzle or big boys puzzle, and it is evolving since ages. Till last century, we used to trade over the floor. People used to execute the trades on top of their voice at the floor trading. Advancement in the digitalization and computers enabled exchanges to increase the span of floor to the digital world and enable people to trade and execute transactions over the globe. India is also not untouched with the development. 1994 National Stock Exchange started online trading as the first digital exchange of the country. Digitalization, in fact, increased the reach of the people to the exchange, increased people's ability to analyze the data. Technical analysis is the field that people started to work on to start looking into the patterns, how stock is behaving. People started to in people started to take care of all the compute power and started algorithmic trading, indulging into algorithmic trading, where transactions are executed on behalf of people or institutions, not by individual but the computers. Initially, algorithmic trading were more on logic based, where certain parameters are were required by the system to look into and the trade were executed. But slowly and steadily, as the field of machine learning and artificial intelligence is enhancing, people started implementing AI in the field of algorithmic trading and enhance their returns over the investment. Broadly speaking, machine learning and artificial intelligence are three categories. Supervised models, where historical data is provided to the system based on which system learns the patterns and use the weights and biases or the formula integrated to predict the future or unseen values. Unsupervised models are basically to look into the patterns without labeling the historical. Our main aim and objective of the thesis is to generate a system using the machine learning algorithms to achieve better return over investments. A system which can adapt itself with the changes in the market and accordingly make decision to buy, sell or hold. Our objective is to achieve using the historical data, historical charts and the intraday data to make the decision for the trading. To derive at the methodology and the logic flow for the system, we reviewed various papers over supervised models implemented in the field of stock trading using deep neural networks LSTM, especially recurrent neural networks, convolutional networks using the image classification and implementation of image recognition in the field of stock trading using the charts. We also studied various papers where researchers have tried to create agents to make decisions using the reinforcement learning models. Based on the literature review, we derived the logic flow. The logic flow presented over here consists different layers. The first layer consisting the data preparation. The second layer consists of three supervised learning models. First is the deep neural network solving the classification problem. Based on the historical data, it is going to predict whether the next trading day is going to be super bearish or bearish, neutral, bullish or super bullish. In the middle, we tried creating a convolutional neural network again as a classification problem where we will be inputting the charts based on the historical data and try to predict how the future trend of the stock would be in the next trading session. The last model is LSTM based model where historical data is provided and we expect the model to give and predict the weighted average price for the next trading session. We'll combine the prediction of all the three models and provide the information to the deep reinforcement learning agent to make the decision whether to buy, sell or hold the transaction and learn from the episodic learning. The first step in our research was the preparation of the data. We got all the information from the exchange related to this stock. First of all, we derived certain database feature such as what is the week of the month, what is the month of the year, which quarter of the year trading is for, whether the trading day is after a holiday. So these are the database features we derived. Apart from this, we also took into consideration the corporate actions. Corporate actions impacts the number of shares being traded in the market and it directly impacts the value of the shares. Because we are giving the information since 1996 till date to our learning model, we needed to adjust the pricing based on the corporate actions. So we took the corporate action information and accordingly we adjusted the price of the data collected from the exchange. Thereafter, we calculated the technical indicators. Most commonly used is the simple moving average. For various periods, we use 5 days, 10 days, 20 days, 50 days, 100 days and 200 days. We also tried to assess the rate of change in the simple moving averages. We also calculated RSI, which is our oscillator and moves between 0 to 100. Based on standard deviation, we also calculated the Bollinger Bands under which range stock would be moving. We also calculated certain Boolean indicators, whether the stock on that particular day is in a bearish phase or a bullish phase, or is a golden cross or is a death cross, or is turning up, changing its trend from downward to upward, or turning down, or that is turning from upward to downward. We added the macro indicators to the stock data. We have taken the information with regard to USD INR pricing for the period of study. We also inserted the percentage change of USD/INR on a particular date. We further added the crude pricing in the Indian rupees and have also collected CPI inflation data for India. Apart from this, we also prepared the chart for the CNN models. We prepared 20-day rolling candlestick based charts, which also incorporates our technical indicators like simple moving averages, Bollinger Bands, and RSI. Data splitting and labeling. While splitting the data, we use two techniques. While going through the LSTM model problem solving, we trained our model for all the information we collected till 31st of March 2018. And thereafter, data pertaining to after 31st March 2018, we use for the testing purposes. In case of the classification problems that we use using the deep neural network and the convolutional neural network, we split the data in 80-20 ratio, where 80% of the data was used for the training and 20% of the data was used for the testing purposes. Data labeling. We labeled, in case of the LSTM problem, we labeled next day's weighted average pricing as the labeled data. In case of classification problems, that is DNN and the CNN problems, we classified the data as super bearish, bearish, neutral, bullish, and super bullish. We labeled the data based on the percentage movement that the stock moved from the current day to the next day. We evaluated the range in which data move in the training period. Based on the same, we divided the ranges into 5 equal quantiles and divided 5 equal quantiles, and every quantile we gave a name as super bearish, bearish, neutral, bullish, and super bullish. LSTM model. We tried to create multiple LSTM models based on their architecture, number of hidden layers, number of memory cells each layer is having. We also tried to implement dropouts in different layers. We also tried to implement regularizers. We also tried implementing LSTM layers with bidirectional LSTM layers to see how the model is performing. Out of all the combinations, we evaluated based on root mean squared error and the mean, and found that model number 6 enlisted at 7 in the table here gave the least RMSE and the least mean. In the next slide, we'll see the prediction performance of the stock for a period more than 2 years from 1st April 2018 is somehow moving with the future pricing. We finalized this model to be used in the reinforcement learning model and move further. Random forest models. We use random forest model not for prediction of future predictions or future trend prediction, but to evaluate the importance of the features that we have selected. We have shown the chart being evaluated using the random forest model, giving the feature score for all the features that we selected, and the feature score we are going to use in our other deep neural network problems to evaluate the future trend of the stock. Similar to the LST model, we also try to evaluate deep neural network with variation in the network, variation in the number of neurons, variation in implementation of the architecture with hyperparameters like regularizers, dropouts to get uh, the best result or best trained model towards the classification problem. Although with all the combinations we were not able to achieve the best uh, model, but we were able to see a pattern in the model that we have selected and shown over here, that stock the model is able to at least tell the future trend. For example, if a stock is showing as bearish, most of the predictions over here, we have shown the confusion matrix, are either marked as bearish or super bearish. So basically, this model we selected because it was not able to predict uh, how the stock is going to behave business wise. Uh, and this was the best we could achieve. And this model we achieved using random forest feature score. We selected top 15 features based on the random forest model feature score, as we shared in our last slide. Uh, we use this model for prediction in our reinforcement learning model. Convolutional neural networks. Convolutional neural networks is actually a very difficult network for us to try. We use sample charts as shown here. These are basically 20-day rolling charts we implemented in the CNN. We classified these charts into 5 classifications as we discussed earlier, into super bearish, bearish, neutral, bullish, and super bullish. And 20-day rolling charts consist of candle charts, every day's candle, what was the movement of the stock in that particular day. Simple moving averages, we incorporated it to showcase how stock is moving. We also incorporated a Bollinger Band. These are basically simple moving average 20 days plus 20 days standard deviation, plus and minus, which gives us the Bollinger Band. And at the bottom we implemented it with the RSI oscillator. We call it oscillator because it moves between 0 and 100. If RSI is crossing 70 mark, we generally say that the stock is in overbought zone and must we can see a downward movement in the stock. If the stock RSI oscillator is going below 30 mark, then we can say that it is in an oversold zone and we can see a reversal in the stock. So we created the charts, this for the period from 1996 till July 2020, and we split the data into 20 format. We tried numerous combinations, and best we could get was something like this. Most of the neural networks were overly biased towards one class or the other. We can say that this particular analysis requires more study to get better accuracies in the predictions. Reinforcement learning models. Reinforcement learning models involve agents getting trained while taking actions in a particular state and dealing with the environment. For implementing reinforcement learning models, we had to develop a complete environment class which takes care of the vectors, a step function which brings in the changes into a particular state depending on the action taken by the agent, and giving the rewards for every action taken. We also incorporated in the environment with the risk surveillance parameters, like agent cannot buy a stock if it does not have fund in hand, or agent cannot sell a stock if it does not have stock in hand. Agent cannot further trade and will get into a terminal state if it loses 90% of the fund. Initially, we gave agent 100,000 INR to start trading, and if the fund in hand and the valuation of the stock is less than 10,000, the environment tells that the agent has reached the terminal state. Agent is maintaining two models. One is the local model for learning, and target model is updated on every episode, end of the every episode, and is used for the as a target for the local model to achieve the highest return. The agent decides the actions based on explorative or exploitation based on the epsilon value. We have seen during our learning process that as the epsilon value is high, agent is making more of explorative decisions that are basically random decisions into the system, and as the epsilon value decays, uh, agent starts making decision based on the models, exploit the existing experience, and accordingly takes the decision. We tried reinforcement models in three scenarios. Uh, first scenario, we did not. First and second scenario, we did not include predictive train models in the environment, and we tried implementing the agent with the historical data, all the statistical data that we derived in a data preparation sheet, along with the intraday data to make the decision and start trading. In the first test, we kept the epsilon decay very low, and we found that throughout the learning period, 1000 episode that we used, reinforcement learning agent remained majorly into uh, exploratory phase. Uh, the chart for the first phase clearly shows that agent was not getting stabilized, as most of the decisions were random decision being in this explorative state. In the second phase, we enhance the epsilon decay, and in turn, after 200 episodes, we saw RL agent was majorly making decision based on the exploitation. That is, it was making decision based on the trained model and was updating itself. The returns were also converging and stabilizing. The third phase, we added the predictions, and we saw the impact of predictions on the RL agent in making the decision. We can see that in the initial phase is basically explorative phase, but in the later phase, when RL agent was stabilizing somewhere around 7 to 8%, it is getting down. And we could easily get the reason is because the CNN model that we try to train is not predicting well. The decisions taken by the reinforcement learning agent are incorrect because the predictions given by the CNN model was not right. We need to work on the CNN model, and a better prediction model will enhance the working of the reinforcement learning agent. Here we have shown the returns for agent A and B. Agent A is not using the predictive models, and agent B is using the predictions from the predictive pre-trained models. The number of episodes, the exploratory phase, both the agents were working with the similar epsilon decay, so they had spent equivalent amount in the respective phase. We can see that at the time of exploration for agent A, the standard deviation is 702.15, while in the exploitation phase, the same reduced to 0.34. That is, exploitation phase, the trained model is actually able to learn the patterns and accordingly make decisions to get us average percentage return to be the highest. Agent B could also achieve, but the problem is with the predictions being given by the pre-trained models, and that resulted into a lesser return. In the medium, agent B is doing a bit better than the phase A and phase B, phase exploitation phase, because it is a combination of exploration and exploitation. In all, we can see that reinforcement learning agents have the capability to train themselves in the intraday trading environment and give a better return. And if we are ensembling in with the pre-trained models, we need to ensemble them with well-trained models. In the conclusion, we would say reinforcement learning models are proving to learn the trading patterns of over episodic learning and have shown a good return over the episodic learning. The predictions from the pre-trained models do have an impact on RL agent trading patterns. Better prediction models will give a better return in reinforcement learning models. CNN models that we tried implementing using the charts need a focus to improvise for future working, and it can be implemented with different forms of charts or different architectures, or implementation with different regularizers or model architectures. People may also implement different approaches with optimizers. We have currently used Adam and regularizers. We use L2 regularizer throughout the study, and people may further work and improvise the work with the use of different optimizers and regularizers to enhance the working of the models. This brings to the end of my presentation for the study that we have done for the master thesis. Thank you very much.